Hey everybody, Smart Silver Stacker here. Hope you're doing well. So silver is resuming its significant bull run following its breakout above $30. Silver closed on Friday for the first time in over a decade above the $30 level, and it looks like its momentum is continuing. We're up 4.18% right now. As of 2:54 on Monday afternoon, looks like the breakout is confirmed by this continued price action. And today, I want to delve into some of the factors that are contributing to this rise in the price of silver and why it is likely not going to stop anytime soon. I think that we're going to be taking out all-time highs in silver in the near future. Now that $30 resistance is gone, I think we're headed to $50. If you look at the chart of gold, for example, gold did participate kind of in that pullback that silver had over the past month or so. We had this kind of correction in the price of the metals. Right now, gold is just right at the previous highs that it had touched in April. So gold still has a lot of room to go here, and silver's going to follow gold. You know, silver has been following gold recently with its breakout. Gold was kind of leading the pack for a while there. Silver now following strong. Both of these metals are heading much higher. Someone just said, why do his videos always start mid-sentence and end mid-sentence? It could have something to do with the live streams. I'm not sure. But I want to talk about China and the impact that they are having on the price of silver and gold here. Of course, you want to get your hands on some gold and silver before they head higher, which they do appear like they are going to be doing soon. You can check out today's video sponsor, SD Bullion. Right now they got a great deal on these 1-ounce gold Britannia coins. You can still get some junk silver. It will cost you more than it would last week, of course, but the premiums are still very reasonable on junk silver, especially these half dollars. And the fact that the premiums on these coins have not begun skyrocketing yet, I think shows you that this bull run is still largely being driven by players other than retail investors. And when they get the memo, this stuff is going to become very difficult to obtain, or at least a lot more expensive to get your hands on. So not financial advice or anything, just sharing with you what I think the best deals are right now. But let's get to the news. We have got China. Last week, new data was released that revealed that China has sold a record amount of U.S. debt in Q1 of 2024. So they are dumping their U.S. Treasury holdings. According to this new data from the U.S. Treasury, China dumped $53.3 billion worth of treasuries combined in the first quarter. That is a record dump. Now, China is one of the biggest holders of U.S. debt. Now, that appears to be changing with the dump, but they still have a lot of this debt that they could be dumping in the future, and that is likely to accelerate. Why? Well, the trade war between the U.S. is increasing. We just had the president unveil a new set of sweeping tariffs on Chinese goods. Now, of course, that's going to contribute to inflation because we import a lot of stuff from China, and that's going to get passed on to U.S. consumers, those tariffs. It's not like the Chinese are going to be paying that. They're just going to raise prices to compensate for that. But even Donald Trump, now if he's elected, may accelerate those tariffs. So the trade war is increasing. Signs of conflict are rising. This is what a Bloomberg analyst had to say. As China is selling, despite the fact that we are closer to a Fed rate cut cycle, there should be a clear intention of diversifying away from U.S. dollar holdings. And what are they diversifying into? Well, I mean, we know they've been stacking up gold, but I want to take a look today at some numbers that indicate they might be getting into silver as well, and they may be contributing to the rise in the price of silver that we are witnessing. He went on to say that China's selling of U.S. treasuries could speed up as the U.S.-China trade war resumes, and that is likely going to be how this plays out, especially if Trump returns as president. But either way, regardless of the election, I don't think U.S.-China relations are going to be improving anytime soon. So they went on to say that with China selling dollar assets, its holdings of gold have risen in the nation's official reserves to 4.9% of their official reserves. That's the highest according to central bank data going back to 2015. Now, one of the things that is driving this conflict is the ongoing bifurcation of the global world order, the rise of the BRICS nations. Putin of Russia and Chinese President Xi Jinping just met up, and they had, this very friendly meeting. Xi greeted Putin on a red carpet outside the Great Hall of the people in Beijing, where they were hailed by marching People's Liberation Army soldiers, a 21-gun salute on Tiananmen Square, and children waving the flags of China and Russia. So, they're really driving home the point that these two are aligned with one another. And the geopolitical lines, they've been drawn, and they are only deepening. We got the BRICS nations talking about de-dollarizing. I've got a clip here of Putin speaking at this recent meeting.
Timely
I don't know if you can hear this.
To move bilateral settlements in national currencies has had a great effect on our trade, and 90% of all settlements are done in ruble and yuan.
Yeah, so this is the story we've been covering for a long time regarding BRICS and de-dollarization. China and Russia now settling 90% of their trade in yuan and rubles. So, clearly China wants to get less exposure to U.S. dollars, and it's understandable because the dollar's been weaponized here. They don't want to be the subject to sanctions. They don't want to have their treasury holdings confiscated or made worthless by some kind of a move in Washington. So, they're trying to get into hard assets. Understandable. But let's look at this data. This is from the Shanghai Gold Exchange. And I'm sorry, this is not the most well-formatted website, but don't worry, we're not going to look at this for too long. I just want to draw your attention to this. This is the most recent benchmark price of silver on the Shanghai Gold Exchange. Okay, now we have to do a little math here because this is denominated in yuan. So we've got to go to Google here. Let me pull up a tab and we will examine exactly what that price indicates in US dollars. So we'll go for, what are we doing here? 8,004 yuan. Sorry, I'm clicking through my tabs here. Okay, so this is, nope, we want, okay, so that's $1,133 for a kilogram of silver on the Shanghai Gold Exchange. Now let's do a little math. We have to divide that into troy ounces because we don't really think in the metric system here too much in the US. But divide that by 32.15. So right now, an ounce of silver on the Shanghai Gold Exchange is trading for $35.27. Think about that. That is significantly higher than the price of gold, or rather the price of silver in U.S. markets, okay? Now, what does that mean? Some buyer and the Shanghai Gold Exchange is driving up the price of silver, and there's a big arbitrage opportunity here. If you go to, say, the COMEX and you buy an ounce of silver for what the current price is, a little over $32, goes to China, it's $3 higher, right? That's a significant price difference, almost 10%. So clearly somebody in China is buying up silver, and it's not coming from you and me, it's not coming from retail investors. Where's it coming from? Well, it's likely coming from bullion warehouses in the West. This is the data from the London Metals Exchange, or the LBMA, the London silver warehouses, and you can see that right now the level of silver is at the lowest point on record that they're displaying here. Of all the years of silver warehouse levels, this level is declining. So, basically what's happening here is that these Western commodities exchanges, they're being drained of their silver. You can see a similar story at the COMEX. This is the 5-year chart of their silver warehouse stocks, down from a peak in 2021 of almost 400 million ounces, today sitting at 298 million ounces. Now, can you really trust these levels, I mean, I don't think so. Remember this story where JP Morgan thought that it had bought 1.3 million tons or $1.3 million worth of nickel. This was in a LBM or an LME warehouse, and it turned out that they were just rocks, right? So, look, you can't really necessarily trust the levels that the COMEX and the LBMA and the LME tell you that they have. I mean, who knows what's in those warehouses? I think that, an audit might reveal some interesting information there, but even their official numbers are on the decline, and there's this big arbitrage between the price of silver in the East and the price of silver in the West. Both prices are heading higher, but in China right now, an ounce of silver is trading almost 10% higher than what it is in the West. So, that's a big opportunity for arbitrage. It's a big opportunity for silver to be flowing from the West to the East. Who's driving that? I don't know. I mean, the official China gold holdings, we know those have been rising as their central bank has been buying up gold. It's very likely that Chinese gold holdings are a lot higher than they're letting on. And as far as I can tell, I haven't seen any official announcement that they're buying up silver. But the numbers, to me, indicate that that is what is occurring. There is a buyer in China that is driving up the price of silver bullion. We know that warehouse levels in the West are on the decline. So, I mean, you can kind of, put two and two together here, and you understand that the Chinese are likely buying up silver. I mean, why are they doing that? Well, again, it's a program of de-dollarization. We know that the alliance here between Russia and China is putting Chinese U.S. dollar holdings at risk. Billions, hundreds of billions of dollars of Russian dollar-denominated assets were seized following their invasion of Ukraine. And this is from this is based on some commentary from Western officials. So the United States is profoundly concerned over China's feeding Russia's war machine to bolster its forces in Ukraine, while Beijing is also professing it wants better trade relations with the West. This is the State Department's top official for East Asia and the Indo-Pacific that said this last week. Daniel Crittenbrink is Assistant Secretary of State for East Asian and Pacific Affairs. He said China can't have it both ways. He added that China's reconstituting Russia's defense industrial base is having an effect that could grow on the battlefield. So it is very clear, I think, to the Chinese when they hear U.S. State Department officials making claims like this or making statements like this, that the writing is on the wall here. There is a huge trade war between the U.S. and China. Relations with Russia have been on the decline. It's very likely that NATO could become involved in that conflict very soon. China has allegedly been supporting Russia with arms. Certainly, they are helping to bolster the Russian economy in light of it being cut off from SWIFT, cut off from the West. And so I think China is rightly concerned about all of these U.S. treasuries that they're holding. But, what does this ultimately mean for silver? Well, it's bullish on multiple levels, right? DR says prelude for war 101. Stack up funds. Yeah, it'd stack up hard funds, certainly. And that's a good point. I mean, this very likely is a prelude to war. There's been a lot of hawkishness over Taiwan, certainly in recent years, and that could very well become a hot war. And if it does, inflation is going to soar absolutely out of control. Not only will that be terrible for supply chains, we import a lot of stuff from China, but the financial warfare also threatens to undermine the dollar significantly. Because think about this. I mean, this is the short-term chart here going back to about 2020 for the U.S. Federal Reserve balance sheet, okay? And, I mean, they have been selling treasuries as part of their program of quantitative tightening since mid-2022. So China is dumping U.S. treasuries. The Fed is unloading U.S. treasuries. Interest rates are rising. The interest on the U.S. national debt is over $1 trillion. This is not sustainable, right? So if China decides to dump a significant portion, and they have just under $1 trillion worth of U.S. treasuries when you combine their official holdings with the holdings of Hong Kong, which they also control, who's going to buy all this stuff up, right? Well, either the Federal Reserve is going to have to get in there and monetize a ton of debt, just like they did back in 2020. You can see they monetized nearly $3 trillion worth of U.S. treasuries in the very short span here, and that unleashed a huge wave of inflation. Well, I mean, if the Chinese decide to dump their treasuries, the Federal Reserve is going to have to buy those up as well. And new borrowing, I mean, the deficit is running at about $2 trillion annually right now. So that also is putting a huge amount of upward pressure on interest rates. And that's leading to all these problems in the U.S. banking system and the commercial real estate system. So, look, I mean, this is not a good scenario for the value of the U.S. dollar and for inflation. Bottom line, I mean, I'm not some, huge fan of Russia or China. Look, they're authoritarian countries, but look, political feelings aside, I mean, you don't have to like China to understand what's playing out here, to understand that they've got us where they want us. And, I do like China in the sense that I buy a lot of stuff from them. So, however I might feel about their leadership or the way they run things, it's really none of my business. I don't live there. I don't really have a dog in that fight, but I buy a lot of things that are made in China, just like all Americans do. And if those things get cut off, it's going to make my standard of living decline. It's going to make inflation go through the roof. So, what makes sense to do? What do you do in this situation? Well, I think a good thing to do is to, get into hard assets. Yeah, and DR says, hope you're all building victory gardens as well. Yeah, you might want to learn how to grow your own food. You might want to buy anything that's imported from China sooner rather than later. If you're going to need something that they make over there, you might want to get your hands on it because it's about to get a lot more expensive. But anyway, I mean, look, there are signs that China is loading up on precious metals. We know they're buying gold. That's their official numbers. Probably buying silver too when you look at those numbers from the Shanghai Gold Exchange. So let me know what you think in the comments down below. Stay safe and happy stacking, everybody, and I will catch you next time. Smart Silver Stacker out.